All right, let's get into it. Forget everything you thought you knew about crypto. Bitcoin's dominance is crumbling, and the altcoin season is screaming at us. Everyone's scrambling, wondering which digital coins are about to explode. Two giants stand out: Ethereum and Solana. These two have been through the grinder, but they're roaring back. We're talking about the biggest gains among the heavy hitters. Today, we're figuring out which one of these, ETH or Sol, will be the absolute king as we rocket into what could be an epic altcoin season. This is the video you absolutely cannot miss. And listen up, because I'm going to drop the ultimate secret on which one could shock everyone and go even higher, but you gotta stick around until the end for that bombshell. Let's talk cold, hard facts. Ethereum, or ETH, has been basically treading water for over 2 years. It even took a gut-wrenching dive back in April, hitting lows we haven't seen in ages. But guess what, y'all? ETH is back, baby. It's reclaiming its spot above the bull market line on the monthly chart. Think of this line like a digital red light, green light. Below it, you're in the bear market, struggling. Above it, it's a bull market, and prices are charging up. So ETH getting back above this level, that screams higher highs are coming. And here's a kicker. Looking at its momentum, or what we call the relative strength index, ETH is nowhere near overheated. Last time it was at this price, it was burning hot. Now it's just warm. This means ETH has a ton of room to run without hitting a wall. And get this, the chart comparing ETH to Bitcoin, it's been going down for over 3 years, but it's finally reversing. It's squeezing, ready to pop. Now, for Solana or Sol, while ETH was kind of flatlining for 2 years, Solana has been cruising sideways for about a year and a half. Crazy, right? But here's the wild difference. Solana has held onto that bull market line on its monthly chart like a champ. This tells us that Solana's bull trend is actually way stronger than Ethereum's right now. In its last big cycle, Solana chopped sideways around that line before absolutely rocketing higher. It looks like we're seeing the exact same thing play out again, which means Solana could be gearing up for another massive surge. But here's the real juicy part, especially when you compare Solana to Bitcoin. A lot of folks think Solana won't beat Bitcoin from here, saying its chart looks just like Ethereum's did in the last cycle. They're missing the big picture. See, Ethereum stopped gaining against Bitcoin back then because it got crushed by cheaper, faster blockchains, like Solana. But this time, Solana is one of the fastest and cheapest chains out there. It's not facing the same old problems Ethereum did. This means Solana versus Bitcoin could still have one monster leg higher to go. The charts don't tell the whole story. What really matters is what's driving these cryptos, the demand. And that's where we're diving into next because it's where things get truly fascinating. So how high can these bad boys go? To figure that out, we gotta look beyond the pretty charts. The forces driving these two are completely different from other altcoins. Both have new exchange-traded funds, or ETFs, which are like super easy ways for big money to invest. Both also have huge companies buying up their coins for their treasuries. And both are being adopted by massive institutions. The demand for these coins can be split into two big buckets: institutional demand, the big players, and retail demand, you and me. Let's start with the big guns, institutional demand. The first thing we watch is money flowing into those new ETFs. Ethereum's spot ETFs, which launched just a few months ago in July 2024, have already seen a mind-blowing $5.5 billion pour in. Most of that has happened super fast, in the last few months. Solana's new spot ETF, on the other hand, just launched a couple of weeks ago. It's brand new, but it's already pulled in almost $100 million. That's not small change for something so fresh. These ETFs are huge for two reasons. One, they make it incredibly easy for anyone holding Bitcoin ETFs to switch into ETH or Solana. And two, and this is the big one, they're the superhighway for massive institutional money to flood into Ethereum and Solana. But here's the catch. Highway doesn't guarantee traffic. You need something to attract those investors, a powerful reason for them to jump in. And this is where it gets crazy. Ethereum and Solana have similar lists of potential catalysts because they're arguably the two best smart contract cryptocurrencies out there. This makes them perfect for things like tokenizing real-world assets or for stablecoin payments, which are digital versions of regular money like the US dollar. But here's the kicker. They each have their own superpowers. For Ethereum, the biggest magnet for attention likely is tokenized real-world assets. Why? Because Ethereum is simply the most secure smart contract cryptocurrency on the planet. It's the battle-tested OG. It holds most of the value locked up in these digital versions of real assets. On the flip side, the biggest magnet for Solana is likely stablecoin payments. Solana has been quietly, not so quietly, preparing for this for a long time. Did you miss the news? PayPal, the world's largest payment processor, partnered with Solana last year for its PUSD stablecoin payments, and they're looking to push its usage even harder this year. You'd think big institutional investors would stick with Ethereum because it's so proven. But it's not that simple. Being the next financial rail, like the backbone for all payments, seems to be much bigger deal than being the next stock exchange. Think about it. All the stock exchange companies in the world are worth around $250 billion, but payment processing companies, a staggering $1.5 trillion. That's a massive difference. There's also the juicy question of yield, or how much you can earn just by holding these coins. Ethereum staking rewards are less than 3%, but Solana staking rewards are closer to 7.5%. That's more than double. Even better, Solana's rewards are significantly higher than what you get from US bonds. This could make Solana super appealing to many big institutions looking for a better return. Now, a small detail, most of Solana's staking rewards come from inflation, meaning new coins are created, and that inflation is also more than double Ethereum's. But here's where the treasury companies come in. These companies, like Chainlink for Ethereum and Sol Strategies for Solana, are buying up roughly $1 billion worth of ETH and Sol each. They're essentially offsetting that inflation and taking a huge chunk of the supply off the market. It almost makes you wonder if that's their real purpose, doesn't it? This is the untold story of how these cryptos are fighting inflation. This all ties directly into retail demand. That's us, the everyday investors. At first glance, you might think Ethereum's Layer 2 chains, which have super low fees compared to the main chain, would actually hurt demand for ETH. But look closer. ETH's main demand isn't about fees. It's about all the cool stuff you can do with ETH on the blockchain. Flashback, the reason why Solana and other so-called Ethereum killers went absolutely wild in the last cycle wasn't because their fees were high. It was because they were dirt cheap and lightning fast. That led to a ton of activity, like trading and borrowing. In the last cycle, Ethereum underperformed Bitcoin because it lost market share to these cheaper, faster alternatives. So it's not really that Layer 2s are stealing market share from Ethereum. It's more accurate to say they're taking market share away from those other Ethereum killer chains. This is fantastic for ETH. It means instead of someone buying some other coin to use on a different blockchain, they'll buy ETH to use on a Layer 2, primarily to buy other altcoins or to use ETH as collateral in decentralized finance to buy even more altcoins. In plain English, Ethereum's Layer 2s mean more chains using ETH as their main asset, which means more demand for ETH, period. But there's one tiny little problem: fragmentation. Almost every Layer 2 has its own unique trading platform, its own lending protocol, and its own flavor of speculative tokens. Meanwhile, most of the money and activity is still stuck on the main Ethereum chain. Now compare that to Solana. On Solana, almost all of the money, all the apps, and all the tokens are on one single chain. From your perspective, the end user, this means you only need to go to one place instead of a dozen. That makes life so much easier. Don't get me wrong, Ethereum's fragmentation issue will get better as technology improves, but it's still a work in progress. Now, why do I even bring this up? Because as far as us retail investors are concerned, we're going to use whatever chain is the cheapest, the fastest, the most user-friendly, and has the most hot new altcoins we want to buy. And right now, Solana has the best of all four worlds. Ethereum, on the other hand, is still lagging on user-friendliness and having all the hottest new coins easily accessible. And this is exactly why the meme coin craze absolutely exploded on Solana and struggled to gain traction elsewhere. Solana's super easy wallets, plus its low cost and lightning speed, made it the perfect playground for retail investors to gamble and speculate. We don't think that core idea has changed. But here's the twist. The user experience on Ethereum has actually gotten significantly better in recent months. Integrating Ethereum and some of its layer 2s with popular wallets has made its ecosystem way more accessible now. This means it will be much easier for you and me to access altcoins on Ethereum than it ever was before. And because both ETH and many of the top tier Ethereum altcoins have been beaten down so hard, this could lead to even bigger gains compared to Solana and its top altcoins. More gains means more retail investors pouring in. This is all hypothetical, of course, but it's easy to see how this could play out. The key takeaway is this: retail investors will stampede to whichever chain offers the best experience. We honestly don't know yet if that will be Ethereum or Solana, but we do know the playing field is a lot more level now than when Solana dominated. But then again, Solana could experience the exact same thing. Imagine PayPal suddenly announces a massive new incentive program for its stablecoin, PUSD, making institutions see Solana as the undeniable next payment rail. That would lead to huge money flowing into Solana's ETFs, causing Sol's price to rocket, which would then make all the altcoins on Solana pump like crazy, pulling in even more retail investors. And since those altcoins are also pretty beaten down, they too could deliver massive returns. So this brings us to the $2 million questions. Which of these two cryptos has the most potential, and how high can they actually go? Considering everything we've covered, the answer to the first question is surprisingly simple. Both ETH and Sol have similar potential right now. Neither one has a clear advantage over the other. They look similar on the charts. They're both accessible to big institutions. They're both being bought up by those treasury companies. They both have major catalysts that could bring in tons of institutional money. And both ETH and Sol are the top choices for retail investors to buy altcoins and use in DeFi. If you want this boiled down to one simple chart, just look at the Sol ETH pair. Up close, it might look like ETH has been winning, but zoom out and it's clear Solana has been the one outperforming ETH until recently. We're just seeing a normal shift back to the average, and it looks like the Sol ETH pair won't fall much further from here. This directly ties into how high they can go. For Ethereum, everyone, and I mean everyone, including us, is eyeing a target of $10,000. Why? Because we believe Ethereum is basically following Bitcoin, just one cycle behind. Bitcoin hit a company value of about $1.3 trillion in 2021. If ETH follows suit, a $1.3 trillion company value for Ethereum would translate to an ETH price of around $10,000. But there's a catch. Because everyone expects $10,000 ETH, one of two things is likely to happen. Either traders start taking profits early, causing ETH to top out somewhere around $8,000 to $9,000, or the big whales, the smart money, will purposely push ETH's price above $10,000, causing everyone who sold early to panic and jump back in at around $11,000 to $12,000. And when you consider that Ethereum still faces a ton of competition, the first scenario, early profit taking, is more likely. So $8,000 to $9,000 ETH could be the top of this cycle. Now for Solana. Everyone, again, including us, is eyeing a $1,000 as the next big target. Our reasoning? We believe Solana is following Ethereum, one cycle behind. Ethereum hit a company value of around $550 billion in 2021. If Solana follows that path, a $550 billion company value for Solana would translate to a Sol price of around $1,000. And just like with ETH, there's a small problem. Everyone expects Sol to hit $1,000. This means we're likely to see one of two scenarios play out. Either traders start taking profits early, causing Sol to top out somewhere around $600 to $700, or the whales will purposely push Sol's price above $1,000, making everyone who sold early FOMO back in at around $1,200 to $1,300. The ranges are different from ETH due to technical analysis. But, believe it or not, we actually think there's a real chance Solana could surprise to the upside. Besides some interesting political connections that point to Solana, the demand drivers that could push Sol higher seem to be stronger on both the retail and institutional sides. Specifically, Solana's push to become the next big payment rail and the massive demand for Sol to buy those hot meme coins could be game changers. Even so, it's still way too early to definitively say that Sol will shock everyone and go higher than expected, especially since it's facing fierce competition from other fast chains. That's why we're playing it safe and saying that Sol will likely stop short of that $1,000 target everyone's watching because people will take profits early. So here's the bottom line, the ultimate secret I promised you. Both ETH and Sol are likely to see incredible 3 to 4 times returns from their current levels. That's the exact same potential. And honestly, after everything that Solana and especially Ethereum holders have been through over the past year or so, I reckon most of them would be pretty darn happy with that kind of gain. If you agree or disagree with that, let me know down in the comments below. And hey, if you're not subscribed to the channel yet, what are you waiting for? Hit that subscribe button right over here. And don't forget to ring that notification bell so you don't miss any of our breaking insights. Seriously, you don't want to be left behind. We'll catch you in the next one.